Hello friends, hope you are all doing well for today's episode. I hope you can brew some coffee, find a comfy chair and calm your mind. Because the topic we're going to talk about today is a very heavy one. This isn't one of those look at the chart and tell a story short-term analyses, but rather a deep conversation about our financial destiny for the next 10 or even 20 years. If you are holding silver, even just a little bit, or if you've recently been watching prices skyrocket, feeling uneasy about the cash you have on hand, and are wondering where you should put your money, then today's content might just subvert your investment knowledge of the past few decades. Today's content is very substantial, with extremely high value, so please be patient and watch until the very end. Okay, let's get started. Recently, a really weird vibe has been pervading the precious metals market. Have you guys felt it? On one hand, the price seems to be still consolidating, just dragging its feet. But on the other hand, physical silver coins and bars on the market are getting harder and harder to buy, and the premiums are getting higher and higher. What is even more interesting is a group of top macroeconomists abroad have started to throw out some terrifying numbers. The most high profile among them is the man we're going to do a deep dive on today, Francis Hunt. This cycle master, known as the market sniper, recently dropped a bombshell. He said silver is brewing an epic storm, and the price target isn't the $30 or $50 we're seeing now, but is aimed straight at $100, $300, and could even potentially hit $500 in an extreme scenario. Hearing this, I believe your first reaction might be the same as mine when I first heard it, thinking to yourself, how could this be possible? Is this some kind of myth or fairy tale? It is only a few dozen US dollars now, and it is going to go up 10 times. That is too exaggerated. I completely understand this skepticism. After all, the education we received since we were young has always taught us to be rational and moderate. We're used to the slow climb of 1%, 2% from bank fixed deposits. And we're used to the rhythm of ups and downs in the stock market. Suddenly hearing this kind of get rich, quick prediction, the gut reaction is to resist, to think it is a scammer. My friends, please try to recall history. In the 1960s and 70s, if someone had told you that an apartment would one day sell for tens of millions, wouldn't people back then have thought he was a lunatic? When Tesla was just founded, if someone had said this company would become a global cornerstone, its stock price would multiply by several hundred times, wouldn't everyone have laughed at him for daydreaming? History has proven time and time again that the great market trends that truly change social classes and alter destinies never happen when everyone feels it is reasonable and comfortable. It always starts quietly when the vast majority of people think it is impossible, too crazy. And then, with lightning speed, transfers wealth from the hands of the doubters to the hands of the believers. Francis Hunt isn't selling anxiety, nor is he making empty promises. What he bases this on are mathematical laws that haven't changed from ancient times to today, and the irreversible structural fractures happening in the global supply chain. Today, I will break down this complex logic in the simplest, most understandable way. We won't talk about difficult jargon. We'll talk about life, about common sense. Please be sure to watch until the very end, because this is about whether we can build a sturdy Noah's Ark for ourselves and our families in the coming massive financial upheaval. First, we need to debunk the biggest myth, price. For many friends, the first thing they do every day when they wake up is open their phones to check the price of silver. Oh no! It dropped 0.5 US dollars today. I am in a bad mood. Oh, it went up 1 US dollar today. Let's add an extra dish tonight. I get this feeling. But Master Hunt tells us if you only stare at the US dollar price, you'll be like someone driving in a foggy forest, only able to see the road right in front of you, but not the cliff or treasure ahead, because the ruler that is the US dollar itself is getting shorter and bent. Inflation is causing the purchasing power of the US dollar to shrink. And if you use a shrinking ruler to measure things, the result you get will of course be inaccurate. So what ruler should we use? We should use the ruler created by God, the ruler of human consensus over thousands of years, and that is the gold to silver ratio. This concept is very core, so please make sure you understand it. Simply put, it is how many ounces of silver you can get for 1 ounce of gold. Let's get in a time machine and look back at history. In ancient Egyptian times, people worshipped the sun god and the moon god, and the exchange ratio back then was about 1 to 2.5 to 1 to 10. You heard that right. Silver was very valuable back then. Then came the Roman Empire, which set a ratio of 1 to 12 later in medieval Europe. And even in early modern America, this ratio remained stable for a long time at around 1 to 15 or 1 to 16. The famous physicist Newton, when he was the master of the Royal Mint of Britain, also based his monetary policy on a similar ratio. Why around 1 to 15? This wasn't just randomly decided by humans. There is a geological basis behind it. In the Earth's crust, the reserves of silver are about 17 to 19 times that of gold. It is like a law of nature. Whatever the production volume is, the value ratio is right there. But, my friends, take a look at what kind of era we're in now. In the past few decades, especially after the global currency went off the gold standard in 1971, this sacred ratio has been completely shattered. We've seen 1 to 80, we've seen 1 to 90. And even during the most panicked time of the pandemic in 2020, it once broke past 1 to 120. What does this mean? It means that even though there is only 10-something times more silver than gold in the Earth's crust, in the financial markets, the price of silver is only 1% of gold's. Silver is like a rubber ball being pushed down into the deep sea, held firmly at the bottom by an artificial force of financial derivatives. This is an extreme, severe, and even immoral distortion of value. Francis Hunt's core point is right here. The laws of physics will ultimately triumph over man-made manipulation. That compressed spring will eventually spring back. And the longer and deeper it is compressed, the more terrifying its rebound force will be. Let's do a simple math problem. Punch it into your calculator yourself, and you'll find that $300 isn't crazy talk. Let's assume that in the next few years, due to factors like global money printing and war risks, gold rises to $3,000. If at that time the market returns to rationality and the gold to silver ratio goes back to the historical norm of 1 to 30. So, 3,000 divided by 30, what should the price of silver be? It is $100. That is already more than 3 times the current price. Then, what if market sentiment swings like a pendulum from extreme pessimism to extreme optimism? What if the gold to silver ratio returns to the 1 to negative 15 level of the 1980s? 3,000 divided by 15, and silver is $200. Let's be a bit bolder. What if gold isn't just 3,000? What if, as some institutions predict, it surges to $5,000 or even higher? And as for silver, what if, due to industrial shortages, the gold to silver ratio drops to 10? That would be $500. So, when we're talking about these numbers, after hearing the math problem, many pragmatic friends will ask, theory is theory. But in real life, if silver is really that profitable, rising to $100, then wouldn't the miners work their asses off to dig? If everyone digs together and the supply increases, wouldn't the price just collapse? That is an excellent question, and it is also silver's most unique and least known secret. This secret is called byproduct economics. Let me use the simplest analogy to explain it to you all. Imagine you opened a bento shop. Your signature dish is fried pork chop, sold for $100 a serving. To increase competitiveness, you decided to include a free egg with every serving of fried pork chop for you. Making money is mainly from selling the fried pork chops. That egg is just something given away for free, or to make some spare change. Now, the market has changed. Everyone suddenly has a crazy craving for eggs, and the price of eggs outside has been driven up to an astronomical price. May I ask, as the bento shop owner, would you go crazy frying pork chops just to sell a few more eggs? If no one buys the fried pork chops, what are you frying so many pork chops for? Throw them away. you'd go broke. This is the current situation for silver mining. Nearly 70% of the world's silver doesn't come from dedicated silver mines at all. They are byproducts dug up incidentally during the mining of copper, lead, zinc, and gold. What does this mean? It means that silver production doesn't depend on the price of silver at all, but is at the mercy of industrial metals like copper, lead, and zinc. If the global economy goes into recession, with less house building and less infrastructure construction, the demand for copper will drop, and copper mines will then cut production. Once copper mines reduce production, silver output will also passively decrease, no matter how high the price of silver gets at that time. This is what is called inelastic supply in economics. Furthermore, even if someone really wanted to open a dedicated silver mine, do you know how hard that is? From exploration to find a vein, to passing the increasingly strict environmental assessments, ESG, nowadays, to building the plant, purchasing equipment, and actually digging out the first bucket of silver ore, it takes an average of 10 years, my friends. This isn't something where we see the price go up today and can conjure up more of it tomorrow. So, what Francishunt sees is an impending physical cliff. The above-ground inventory is being depleted. New mines underground can't be dug out, and the grade of old mines is declining year by year. This is a deadlock. When a tsunami of capital floods into this supply-locked market, there is no other way to release the pressure except for a price explosion. If the supply side is a deadlock, then the demand side is an explosion. In the past, when we thought of silver, it was probably gold and silver jewelry for weddings, or the silver tails in historical dramas. But now, silver's identity is completely changed. It is a high-tech metal. It is a green energy metal. Everyone. Take a look at what we're most proud of. It is semiconductors, the electronics industry. Silver is the most electrically and thermally conductive element on this planet, bar none. In the high-tech fields that pursue efficiency and speed, silver is irreplaceable. Let's list out the hottest industries right now. Own solar photovoltaics, PV, the solar panels installed on rooftops. Every single panel needs to use silver paste to conduct electricity. As the whole world is pushing for net zero carbon emissions, the deployment of solar panels is growing by multiples. This isn't a question of whether we want to do it or not. It is a trend that governments worldwide are mandating through legislation too. Electric vehicles. EV, a traditional gas-powered car might only use a tiny bit of silver, but an electric car, from the battery management system, motor control, to the onboard computer, the amount of silver used is several times that of a traditional car. 5G and AI, the 5G base stations and servers we use now, in order to ensure signal transmission isn't delayed and doesn't overheat, all require large amounts of silver, and Francishunt specifically mentioned a future silver eating monster solid-state batteries. This is the next generation of battery technology, and major companies like Samsung and Toyota are going all out on its R&D. Once this technology matures and is commercialized, its demand for silver will be devastating. Some scientists estimate that just to meet the future global demand for electric vehicles to switch to solid-state batteries, it might consume the entire current annual global silver production. And that is not even counting medical, missiles, RFID tags, and so on. This is like a game of musical chairs. The chairs are getting fewer and fewer, and they're also locked up and can't be brought in. But the number of people who want a chair is increasing, and everyone has to sit down. Industrial giants need it, government energy policies need it, the Department of Defense needs it. At that point, will the price still be what it is now? Now that we're done talking about supply and demand in the macroeconomy. This next chapter, I believe, is the most important part for today, because it deals not with the market, but with our own minds. Francishunt proposed a very sharp concept called the parabolic law. This isn't just technical analysis, this is investment psychology. Many veteran friends have been investing their whole lives and often have one regret. I got the direction right, but I didn't make the big money. Why? Because you get off too early. Our human nature is fragile. When we buy silver at $20 and it rises to $30, making a 50% profit, a voice in our heads will start to say, yeah, this is pretty good. Dozens of times better than a fixed deposit. Hurry up and sell. What it drops back down. This is the so-called fear of heights. But Master Hunt told us that in any real supercycle, the distribution of profits is uneven. Over 50% or even 70% of the gains don't happen slowly over the long period at the beginning, but are concentrated in the final, shortest, and most insane parabolic blowout phase. Imagine you are boiling water. For the first 10 minutes, the water temperature rises slowly, uneventfully. At this point, you feel very bored and even doubt if the water will ever boil. If you turn off the heat when the water just starts to form small bubbles, then you'll never see the final spectacular sight of the water churning and steam rocketing into the sky. And you will also have missed the moment of its most powerful energy release. This stretch of the road is very difficult to walk. Why? Because the main market players, the big sharks, will constantly create violent fluctuations during the initial rise. They will pull the price up, then viciously smash it down, shaking off the retail investors who lack confidence and just want to make a quick buck. This is what we often call a shakeout, when the price of silver rushes up to $50 in the future and then suddenly plummets back to $35. Will you be scared into selling at a loss? When the price of silver rushes up to $80 and the media starts overwhelmingly saying the bubble has burst, will you doubt yourself? At this time, the only thing that can support you to hold on to your chips is not luck, but your understanding. It is the logic we're talking about today. Has the gold-silver ratio returned to its historic low? Not yet. Then hold. Has the physical silver deficit been filled? Not yet. Then hold. Have central banks around the world stopped printing money? Not yet. Then hold. As long as the structural factors haven't changed, any pullback in between is not the end of the world, but a final chance from God for you to add to your position and get on board. Francis Hunt's warning is actually giving us a vaccination, allowing us to remain calm as still water and smile at the storm when facing the violent fluctuations that may occur in the future. Let's elevate our perspective a bit. When we buy silver, is it really just to make a profit? Actually, this is a philosophical reflection on money, my friends. Feel the bills in your pocket. Look at the numbers in your bank book. Do you really believe these numbers can secure your old age? Look at our experience shopping at the supermarket. 10 years ago, $1,000 could buy a shopping cart full of fish, meat, vegetables, and fruit. And now, you go in with $1,000, and it might be gone after just a few green vegetables and a piece of meat. This is inflation, and this is the collapse of the fiat currency system. The government, by continuously printing money, has diluted the fruits of our hard labor in this broader context. Silver has already surpassed its simple commodity attribute. It is returning to its essence of several thousand years, true money. Gold is great. It is the currency of kings. But gold is too expensive. An ounce costs several thousand US. Not everyone can afford it. Silver is different. It is the people's currency. When the public loses faith in paper money and wants to find something tangible to preserve value, silver is the choice with the lowest barrier to entry and the best liquidity. That out of control phase predicted by Francis Hunt is actually the phase where public confidence collapses, when people find that the money in their banks is becoming worth less and less. Everyone will panic, exchange their paper money for any physical asset. At that point, the pricing power is no longer in the hands of a few contracts on the futures exchange, but in the hands of every common person who wants to protect their assets. This is why the price will go out of control. Because once confidence breaks like a dam, The flood cannot be stopped. Speaking of which, I believe the question everyone is most concerned about has arrived. If silver really does go up, when should I sell? I don't want to hold on to a great fortune, only to end up back at square one like riding a roller coaster. This is a very practical question. Knowing when to buy makes you an apprentice. Knowing when to sell makes you a master. The exit strategy given by Francis Schunt is very wise. Everyone must take notes. His advice is, forget the US dollar price. Keep an eye on the ratio and the crowd's sentiment. First indicator, the gold to silver ratio. This is that ruler we talked about at the beginning. When the gold to silver ratio drops all the way down from its current 80-something, when it drops below 50, we can start paying attention. When it drops below 40, we can start taking profits in batches. If it drops below 30 or even reaches 15, at this point silver is already very expensive relative to gold. This is when we should be making a major shift in our assets. You can exchange your silver for gold or for undervalued land and property second. Indicator, the shoe shine boy theory, public sentiment. This is a more intuitive, everyday indicator. When you walk to the park at the end of the alley and hear the neighbors, who usually just gossip, all enthusiastically discussing silver, when your barber and taxi driver are all asking you how to buy silver, when your bank's financial advisor calls you, not to sell you insurance, but to beg you to buy a silver fund, when the news media is broadcasting 24 divided by 7 about silver hitting new highs, and everyone is caught up in a frenzy thinking you'll definitely make money by buying silver. My friends, that is when we should be quietly exiting the market. At this point, we should elegantly sell the chips in our hands to these people who are rushing in at the last minute. Don't think about selling at the absolute peak. That is something for the gods. Leave the fishtail for others to eat. As long as we get to eat the fattest, safest part of the fish's body, that is enough for us to enjoy our retirement. Before we knew it, we've been talking for so long. Honestly, I'd want to say a few words from the heart to all my friends. It really hasn't been easy for our generation. We've experienced the miracle of the economic takeoff, an era where as long as you were willing to hustle, you would win. We've also seen the madness of the stock market hitting over 10,000 points, and we've survived the ruthlessness of the financial tsunami. We know deep down that money is earned with sweat, and preserving it is even harder. Now, we are at a turning point of a new era. The world has changed. The rules have changed. Facing what could be a historic level redistribution of wealth, I am saying all this not to make you greedy, not to make you gamble away your entire fortune. I don't want you to blindly go Allen out of greed. The pressure would be too immense. You wouldn't be able to sleep. And that would go against the original intention of our rich golden life to pursue peace of mind. But what I want even less is for everyone to stand on the sidelines because you don't understand, are hesitant or are afraid, just watching helplessly as this train of wealth departs. And in the end, have no choice but to bear the bitter consequences of inflation, watching your pensions shrink. Francis Schunt's warning is actually a gift. He helped us see through the fog. You don't need to make any radical moves. You just need to, in your asset allocation, set aside a portion, maybe 10%, maybe 20%, and exchange it for real, physical silver. Put it in a safe or a safe place. This isn't for speculation. This is for insurance. This is so that when the financial world outside is in turmoil, you have a solid sense of security in your hands. This is so that one day in the future, when you hand this silver over to your grandchildren, you can proudly tell them, this is the wealth that Grandpa and Grandma left for you because they understood the situation back then. Now, I'd like to ask everyone to calm down and think for a moment, if in 3 years the gold-silver ratio really returns to 30 and silver really surges into the triple digits, will you thank your present self for taking action? Or will you, like you've missed certain opportunities before, slap your thigh and say, If only I had known the most painful thing in life is not failure. But I could have. Welcome to leave a comment below the video. Tell me your real thoughts. Are you holding silver right now? How do you see this opportunity? Are you planning to leave it for your kids as an heirloom? Or are you preparing to do some swing trading to earn a bit of retirement pocket money? Type out your story, your worries, your views. We at Gold Pulse are a warm, big family. Here, there is no ridicule, only mutual support. We will watch the path together, light the way together, and walk this road to wealth together. All right, that is all for today. If you feel that today's in-depth analysis has helped you see through the fog of the market and eased your mind, please don't forget to give me a like. That is the biggest encouragement for me. Also, please subscribe to our channel and share this video with your friends around you who are also worrying about their retirement funds. We will continue to be here, acting as a beacon on your path to wealth, helping you watch over every storm and surge. No matter how the world changes, I hope everyone can eat well, sleep well, and be able to laugh. I am your old friend. We'll see you in the next video, wishing everyone peace and safety.